Hello, everyone. Welcome to our webinar on economic conditions in manufacturing. My name is Carmiana Matson. I am the Assistant Vice President of Regional Outreach and Public Programs at the Federal Reserve Bank of Minneapolis. In just a moment, I'm going to be turning it over to our speaker, Joe Mann, but first a few announcements. Everyone who is registered for today's event will be receiving a copy of this video as well as Joe's slides. We will be emailing those to you next week. Joe will entertain questions at the end of his presentation via the chat box on Zoom. So you can feel free to type questions in the chat box at any time. And when you go to leave this webinar, please take a moment to fill out our quick 3-question survey to give us feedback for future events. Thanks. I'll turn it over to Joe.
Thank you, Carmi. And thanks everyone for tuning in today to hear about our latest survey results on manufacturing. This is a long-running survey that we have, and we do it in partnership with the Minnesota Department of Employment and Economic Development. We're very proud of it, and we think the results this year are very interesting and revealing. So thank you for tuning in. One quick disclaimer before I get going. Any views I express today are my own and not necessarily those of the Minneapolis Fed. We value our independence and nonpartisanship as an institution. It's important that we maintain that. And so I just want to make it clear that if I express any opinions, they're my own and my own only. Quick word about this webinar. It's part of a series that we're doing. It's not exactly a new series anymore. We've been doing these for a few months. This was a decision we made last year to kind of continue our annual Regional Economic Conditions Conference and just kind of keep it going throughout the year in a virtual format. Obviously, the pandemic made this of more interest. We really ramped up our survey efforts and other real-time economic monitoring over the last year to keep tabs on what was happening, what kind of impact the pandemic was having on the economy in our region. And so this is just an opportunity for us to share those with the public and to kind of interact, since we can't really get out and do speeches right now. And we do appreciate you tuning in. Let your friends know if you think this is interesting, if you think you know other people who might be interested in joining us for future iterations of this, and please do share your feedback afterwards. So I'm going to give just a quick, I think most of the people in the audience are going to be familiar with the Fed, so I'm not going to spend a lot of time talking about the Fed and what we do, but I'll just give a kind of quick reminder and overview of what our region is before I talk a little bit about the manufacturing sector and just kind of lay out the parameters of the sector of the economy that I'll be describing. And then I'll get into our survey results. Sort of quick punchline or preview of the survey results. Not surprisingly, 2020 was a pretty bad year for manufacturers in our region, although maybe not as bad as it has been for a lot of other sectors in the economy, certainly for hospitality, tourism, food and accommodation, those sorts of industries which were most directly affected by the pandemic. And it was really kind of a mixed bag, and I'll talk about that a little bit more. In spite of the fact that 2020 was a bad year, the outlook for the coming year, for 2021, was fairly optimistic, at least for the year as a whole. We did have a lot of respondents say that they don't expect conditions to return to normal that soon, but overall, they're optimistic for growth to return in the coming year. And then I'll go over some special questions we asked specifically about the impact of the pandemic this year. So just a quick word about the region that I'll be focusing on. So the Federal Reserve, as many of you already know, is kind of unique among central banks in that we're a decentralized central bank in the United States. When the Fed was created in the early 20th century, the nation was divided up into 12 Federal Reserve districts. And here in Minneapolis, we're responsible for the 9th district, which covers the states of Minnesota, North Dakota, South Dakota, Montana, and we have portions of Wisconsin, the northwest portion of Wisconsin, and the Upper Peninsula of Michigan is in our region as well. So that's really kind of those are the states that I'll be focusing on, our 9th district states. It's a fairly diverse economy in this part of the country. Obviously, agriculture and natural resources are pretty important sectors of the economy. But as I'll show you in a moment, manufacturing is fairly important in our region, not just in Minnesota, but in our other states as well, and actually relatively larger share of the economy than it is nationwide. So I don't think I need to go into great detail explaining what I mean by the manufacturing sector. Anything that's produced in a factory, it's sometimes referred to as the segment of our economy that weighs the most. So as opposed to, say, services and healthcare, information technology, the financial sector, manufacturing is the production of real goods, both durable goods, that is to say, things that last longer than years, like appliances, medical devices, and then non-durable goods, those consumer items that last less than a year, like regular household goods and food as well, falls into the manufacturing sector. So while you can think of this as being of production coming out of factories, it's a fairly broad array of goods that we're talking about. Everything from food to sort of simple stamped metal parts to extremely high-tech instruments and medical devices and things of that nature. And it's a relatively large share of the economy. So here I've got a pie chart just showing you a breakdown of GDP or output. And I'm comparing the US versus the 9th district. And that part of the pie that I've broken out there separately is the share of GDP, of the total goods and services produced in the economy, that is accounted for by the manufacturing sector. So a couple things to take away from this, both nationally and in our region. GDP is manufacturing is a relatively large share of our economy, of our output, of what we produce. And it's a somewhat a substantially larger share of the economy in the 9th district than it is nationally. So nationally, about 11% of the US GDP comes from manufacturing. In the 9th district, it's closer to 15%. Turning to the employment picture, that's the case as well. Again, manufacturing accounts for a large share of employment. And these are people working in manufacturing enterprises, both in production, but also for firms that are classified as manufacturing firms. So if you work in the back office or in sales for a manufacturing firm, you're going to be, if you're primarily a manufacturer, then you're going to be counted as a manufacturing employee. So again, you can see here a significant portion of our labor force, and in the 9th district in Minnesota and surrounding states, a relatively larger share of our workforce works in factories or in some way in manufacturing than nationwide. And I think again, that's maybe surprising to some people. Because when people think of this part of the country, they don't necessarily think of us being necessarily a manufacturing heavy part of the country, but in fact, it is. And in fact, what's interesting, if you break these data down a little further, if you look at output by county, as much or more of our manufactured output comes from non-metropolitan or rural counties as comes from big cities, from metropolitan areas as well. So not only is it a large portion of the economy, but it's sort of equally distributed between rural and urban areas as well. Again, I think people tend to think of factories and manufacturing as taking place in big cities, but that is not the case, and it's increasingly not the case as time goes on. We have a lot of rural manufacturers in our region, and our region is heavily rural, and so with that kind of understanding, it sort of makes sense, I think. So to get into our survey results, we have a lot of manufacturers, as you've just seen, based in the region. This is a survey we've been doing for nearly 2 decades now in partnership with the Minnesota Department of Employment and Economic Development. We both released our results yesterday. So just a few words about the survey itself. So this survey is conducted via really the sort of statistical best practices for economic surveys. We conduct a random sample of a large number of firms in the district. We sampled nearly 3,000 firms district-wide, roughly even split between Minnesota and the other states in the 9th district. That's again North and South Dakota, Montana, and then portions of Wisconsin and Michigan. And the sample was random, and it was also stratified by firm size. We made sure to sample an appropriate number of firms from each state and firms with different numbers of employees. So we tabulate firm size by the number of employees. So we tried to make sure we got a good representation of large and small firms. In fact, most of these firms are very small. They're 10 employees or fewer. A lot of our output, of course, comes from large firms, so we try to be representative. And we conduct this survey via mail. We draw a random sample. We send out survey questionnaires via mail to these addresses, and then respondents get the opportunity to return them. We, of course, pay for postage to make it as easy for them as possible. And this year, between Minnesota and the other states, we got 476 respondents total from the district, which is a pretty good turnout relative to what we've gotten in recent years. I think folks were we're pretty eager to share their information with us this year. And I'll just mention one more thing. I've mentioned our partnership with Minnesota DEED. Minnesota DEED conducts this survey in Minnesota, the Minnesota portion of it, and we at the Minneapolis Fed conduct this survey for the remaining states in the 9th district. And just to be clear, the results that I'll be showing for you are for the district as a whole. So for all of the states in this region. If you're interested in just the Minnesota results, you can go to their website at Minnesota DEED and see the results just for Minnesota, but our results include theirs as well as other states. So getting into the survey results themselves, perhaps not surprising to say that 2020 was a difficult year. It is surprising in a certain sense in that manufacturers, compared to a lot of other industries, were relatively less affected by the pandemic restrictions. A lot of manufacturers, even during the early lockdown phase of the pandemic, were classified as essential businesses. They, of course, and we got a lot of comments about the extent to which they had to adapt to the new conditions they were operating under, space employees apart to the extent possible, provide personal protective equipment for employees. And but all of these things added up, in addition to the recession that hit the economy as a whole. They all added up to a bad year overall. So that's displayed in this chart that I have for you here. This is called the diffusion index. It's just a quick way of summarizing the responses that we get on the surveys. So we ask about a number of business indicators, and we ask businesses whether they increased, decreased, or were unchanged in the last year relative to the previous year. So this is 2020 relative to 2019. And you can see here we have orders, or you can think of that as being demand, the amount of orders that manufacturers are getting from their customers, production level or output, employment, and a number of other indicators that you can see on this chart here. And a diffusion index just aggregates these results in such a way that a value above 50 tells us that the respondents indicated that factor had increased on average. Values below 50 indicate contraction on average, and you can think of being further away from 50 in either direction as being sort of a more substantial increase or decrease. But this is just a way of kind of averaging survey results. So to put these in context, more than half of the manufacturers we surveyed told us that their number of orders or demand decreased in 2020 relative to a year earlier. 56%, in fact, said that orders were down. Just exactly 50% told us that production was down. Employment was a little bit more unchanged. Only about a third told us that they decreased employment, which is still obviously a very large portion. About 48% told us they left employment unchanged. And you can see that all of these other variables here, the responses on average indicated that they decreased. The one exception was selling prices. We got a lot of comments about supply chain disruptions and input prices going up. And this indicates to us that manufacturers were able to pass some of those costs onto their customers in the form of higher prices that they were charging for their output. So that's the one indicator on this chart that decreased. So we asked these manufacturers what happened over the last year. Just to put these in kind of historical context, I've mentioned that we've been doing this survey for a long time now, and I've just plotted these results going back to 2005 when we went to an annual basis for these surveys. And you can see these are the worst results that we've gotten, at least for orders, production, and employment, those kind of core three things. These are the worst results that we've gotten since the Great Recession. Again, not surprising when you think of what was going on in the last year. There's a lot of variability in the survey results, and I'll talk about that a little bit later, but on average, it was a bad year. In spite of that, expectations for 2021 were positive. Now, there's an important qualification I need to make here. which is that we ask for them to tell us what their expectations are for 2021 compared with the year before. So on average, you can see in this chart, this is still the diffusion index. I have the previous results for 2020 still here, and I've added these gold bars indicating their outlook for 2021 for the same indicators. And again, on average, expecting growth in their business in both demand or orders and production, employment, and in profits and productivity as well over the coming year. But the important qualification is the comparison here is 2021 compared to 2020. And we know from what I just showed you that 2020 was a down year. So even though expectations are calling for growth, they're calling for growth from what for many of these respondents was a reduced level. So those kind of comparisons are important to keep in mind during an economy like we've experienced over the last year, where we've seen really sharp contractions in a number of areas of the economy. And we see that in overall GDP as well. So positive expectations for growth to return to next year, but that doesn't necessarily mean everything is going to be back to normal. And I'll talk about that a little bit more in a moment. But I just kind of want to point out that where does this optimism compare to previous years? On average, when we survey folks in this manufacturing survey, they tend to be pretty optimistic for the coming year. You can see even going back to the Great Recession in 2009, a lot of our manufacturers were telling us they were expecting growth in the coming year. And so this is consistent with that. It's about sort of a typical level of optimism for the coming year. And again, these are just their expectations. So nobody knows what's really going to happen in the coming year. But obviously, we survey these folks for a reason, which is that they're very knowledgeable about their industries. And we want to know what their expectations are for the economy, because it helps us get a better picture of what's happening in our regional economy and in the national economy as well. Another thing that we asked them about are their expectations for their state economies overall. So just to be clear, the results I've been showing you so far are only their expectation and their performance at their own business. So when we ask them about employment, we really are asking them, did you increase employment at your firm or decrease employment at your firm? We also asked them about their outlooks for their state economy, so outside their own business. And we only ask about outlooks in this case because we know what happened in the last year. So I'm just comparing here their outlooks for 2021 compared to the previous year. And what you can see is that generally these manufacturing firms are expecting growth in their state economies in the coming year, expecting growth in employment and in investment and overall economic growth as well. But in some cases, less so than they were last year, or rather there's a smaller portion of them expecting growth over the coming year. Overall, a lot of folks in the survey had neutral expectations, sort of flat expectations for the coming year. So about 50% of the respondents told us that they expected business investment to be unchanged. It was 45% expected flat business investment over the coming year. A slightly larger proportion told us that they expected increased business investment, and that was consistent with the rest of these results. So most people expecting the economy to sort of stay level, a slightly higher proportion expecting growth compared with those expecting contraction over the coming year. The one big exception is in inflation. I mentioned earlier that a lot of these manufacturers have been reporting to us over the last year that they've seen really sharp increases in some of their input costs. And I think that's reflected in kind of a higher outlook for inflation. So getting into the kind of pandemic impact, we asked a couple special questions on the survey this year. In fact, normally in a normal year, this survey fits on one side of a relatively small card and allows them to mail it back easily to us. We actually had 2 pages of survey this year because we wanted to ask them about the pandemic, and we also wanted to give them an opportunity to just provide comments. We did get a lot of interesting comments that, if I have time, I'll try and share the tenor of some of those. But overall, you can see here there were some particular areas where the pandemic had more severe impact. I think what's most noteworthy, if you look at this chart, so this is again asking about the impact specifically of COVID-19 on certain aspects of business. So supply chain delays, cash availability, revenues, and things of that nature. A large portion of respondents actually telling us that there really wasn't any effect. That's that kind of gold bar in the middle. You can see, but the biggest impact is delays in supply chain, in lead times for production. You can see at the top of this list, a large portion, better than 3/4, told us that they were experiencing increased delays due to the sort of international supply chain issues, especially during that early part of the pandemic. Um, a decent proportion, more than 2 in 5, reported that they requested financial assistance in some form. We got a lot of unsolicited comments about the Paycheck Protection Program loans that were available earlier in the year. A number of commenters expressed that those programs are very helpful to them. Obviously, you can see here sort of an equal breakdown between those who furloughed employees and those who didn't furlough employees due to the pandemic. And then one of the other big impacts that I'll point to at the bottom is in productivity. Nearly half of firms told us that they experienced decreased productivity as a result of the pandemic. Those are the kind of things that really jump out from this chart in terms of the biggest impacts of the pandemic. And finally, one last thing I'll show before we move to questions. We asked these businesses, how long do they expect it'll be before they go back to normal operations? And this is to kind of temper some of that optimism that you could see in the previous charts that I presented. As you can see here, that nearly half of the manufacturers that we surveyed, 48%, told us that they think it'll be more than 6 months before they go back to normal operations. Again, maybe this seems surprising given the outlook for growth in the coming year, but as I mentioned, this is growth coming off of a very difficult year, and so back to normal, I think for most people is in sort of the pre-pandemic level of output or production, and about half of them told us that they don't expect to go back to normal for more than 6 months. Conversely, nearly 20%, 19% of them told us that they have experienced little effect on their business at all. Only a relatively small number, 1%, told us that they were going out of business, and everyone else fell somewhere in between. 15% told us that they expect to return to normal in the next 4 to 6 months. And so you can kind of see the breakdown here. And this kind of underscores really that this has been, and this is the last thing I'll leave you with before we go to questions, really that this has been kind of an uneven, the pandemic has been kind of an uneven experience for a lot of these manufacturers. And we got this came out a lot in the comments that we received. A lot of folks told us that, in fact, that this was one of the best years they've ever had. Some folks said that it was kind of a story of 2 years. We got a lot of comments where people said the initial shock of the pandemic was severe on their business, but they recovered, and then they experienced really strong demand and growth at the end of the year. And I think that that's part of why we see some of this optimism for the coming year. I will point out that some of the comments that we received were from folks saying that they didn't experience much of an impact from the pandemic yet, but they're concerned about what's coming. So while they had an okay 2020, they're more concerned about 2021. We got a number of comments to that effect, and that just goes to kind of underscore that even within the manufacturing sector, the pandemic had a pretty disparate impact across businesses. So with that, I'm going to turn it over to questions. Just want to say thanks to everybody for listening. I think we have a few minutes here to take questions, and please feel free to reach out to me using the contact info on this screen if you would like to connect outside, and happy to entertain virtual speech requests to groups as well. Thank you.
If you have a question for Joe, you can type it in the chat box right now. Joe, let's start with, were there any companies in particular that experienced a good year in this sector, maybe construction or?
Yeah, so actually we got a lot of comments from folks in the construction materials sector that said demand for construction materials was really strong this year. And we know that looking at the data that we've seen already on construction, a lot of folks sitting around at home thinking about home renovation projects. Obviously, we know lumber prices really went through the roof earlier this year, but that was true for construction materials more broadly. And we do have a lot of producers of construction materials in the region. I want to point out, we don't really break down our manufacturing respondents by their kind of subsector. I can identify individual respondents, what line of business they're in, but the sample isn't really large enough that I feel comfortable saying the folks who produce construction materials did better. I'm getting that mostly from comments that people made. So those were businesses that did a little bit better. We also conversely got a number of comments from businesses that that serve the food service and accommodation industries. As you can imagine, those industries were the ones that suffered the most due to the pandemic, and so demand for products to serve those industries were down a lot. And then, of course, there were a lot of folks in between as well.
A few slides ago, you had shown that there was a small percentage of companies indicating they felt they might go out of business in the upcoming year. Do you have data on how that compares with last year? Do we feel that there are a number of manufacturers who have already gone out of business and that's maybe skewing the results from year to year?
Yeah, we don't really have a good idea about that. I mean, I think we got a couple responses where, in fact, I got one response where the person just sent the form back and said they're out of business and they didn't really fill out the rest of the form. But yeah, that's always a challenge in these surveys because we don't know how many. There's always a lot of churn, openings and closings, new establishments of businesses, and so we don't really know how the sort of universe of firms that we're surveying changes from year to year, because those are just reflected typically in a return to sender from the survey form that we send out when those businesses close. And we do get a lot of those just because, again, as I mentioned, there's a lot of churn in the number of manufacturing firms. So kind of hard to say because we didn't ask the same question last year about the pandemic impact for obvious reasons. Nobody knew it was coming at that time in late 2019. So we didn't ask whether they expected to go out of business in the coming year. It's just not something that we usually ask about.
Were there any surprises in the data, Joe? Things that you didn't expect to see, maybe in the open-ended comments or elsewhere?
Yeah, I think I think one thing that I was surprised by was well, I think superficially you might be surprised by how optimistic folks were for the coming year. I was surprised, I think, by how relatively good the results for the past year were. And I wasn't terribly surprised because I have a lot of interaction with manufacturers, and I know that some were telling us that they were having a good year in 2020. And as I said, I think compared to a normal survey that we do during whatever a normal year constitutes, there was a lot more variability in the survey respondents. But I think overall, I was expecting a little bit more negativity over the past year. And again, I think a lot of respondents tried to clarify in the comments that they had a positive year overall, but part of the year was really difficult. And I think that that's kind of reflected in the survey results as well.
One of our viewers is asking if the survey asked about the impact of extended unemployment benefits and the effect on workforce availability. I don't believe you mentioned that, but could you speak to that?
Yeah, so we do ask about labor availability. And if you go back, I'll just go back to 2020, you can see that actually labor availability is the indicator that's down the most, which is maybe surprising given that we know that the unemployment rate went up a lot over this past year. So why is it that that manufacturers are telling us that the workforce availability decreased in the past year? A lot clarified in the comments that it was due to people being sick, staying home because they had a sick relative, not wanting to be exposed and things of that nature. And we did get unsolicited comments about the impact of enhanced unemployment benefits, but only a few of those. So I can't really unpack exactly why we're getting this result. It's not, I shouldn't say it's not surprising, but it's consistent with what we've seen in recent years where firms have been telling us that it's hard to find workers. It's just maybe a little bit surprising this last year because so many people lost their jobs over this last year. It just goes to show that workers are extremely heterogeneous. They can't just be just because you lost a job working at a resort or a hotel, you can't necessarily go to work as a machinist in a factory right away. It's not that easy to convert from one job to another. So not every sector experiences the labor market in the same way.
Thanks, Joe. That's all the time we have today for questions.
Thanks, everyone, for tuning in.
Thank you. Please fill out our survey as you exit to give us a little feedback about this event, and we'll be sending a follow-up email to you next week with the slides and video from this event. Thanks so much.